Right. Hello, everyone. How are we all going tonight? We'll kick this off and hopefully the rest of the crew jump in the next 10 minutes or so. So tonight's webinar will actually be talking about what cryptocurrency holdings mean for your tax return, especially this year, 2021, with Bitcoin and crypto becoming so popular that it has actually been picked up by the ATOs. They're actually keeping quite a close eye on it. So I'm Kate. I'm the marketing specialist from ePocket. So ePocket are a crypto exchange and a digital wallet synchronized into one platform. So you can actually hold your cryptocurrency and your fiat money within the same application. You can trade between them. You can trade between different cryptocurrencies. You can transfer between your wallet and other people's wallets just by copying or scanning a QR code. We've tried to create a unique fintech solution which can actually bridge the gap that is currently there in the financial system, especially between different countries. So we allow remittance between countries without those massive hefty fees that the banks currently charge. And we facilitate bill payment and event ticketing. We've actually just released our brand new app. So now you can actually do all your crypto trades on your iOS or your Android phones. That's super exciting. It's taken a lot of effort to get that out. So we're very excited to be launching that. Now I'm going to pass it over to Miriam. So Miriam is the founder and director of Fab Tax Accounting. Welcome. How are you? I just don't think you're. Sorry, we just couldn't hear.
Yeah, I've turned it on now, so you should be able to hear me.
Okay, perfect. Yeah, that's all good. That's great. So Miriam's actually a bit of a specialist in cryptocurrency, aren't
Yes,
you?
I've got a younger client base. So my clients started getting involved in cryptocurrency quite a few years ago, and then it got flagged to me that this was going to be something that I needed to be advising them on from a tax perspective, and so have been following it pretty as my clients have been investing for several years now.
Yeah, awesome. And so how long ago did you found Fab Tax Accounting?
So I've had this accounting business for 10 years. It's my 10th year this year, so quite excited about that because the stats for businesses getting to 10 years isn't sometimes that great from a global perspective. But 10 years since I started the accounting business, and most of my clients now come from referrals. They're probably similar in age to myself, a lot of business owners, and have been getting a lot of inquiries about cryptocurrency. It's my high. I don't do anything other than I have a little bit on my website about crypto, and I get a lead every day from someone with cryptocurrency tax questions. So a lot of my time now is answering, and most cryptocurrency investors usually have something specific that they aren't sure about with their one. So it's more so just making sure we're covering off everything from whatever questions they have, because there's usually some sort of odd thing that's happened and they have questions about it.
Yeah, absolutely. Yeah, brilliant. So I think everyone should be ready to jump right into the presentation or the workshop.
Great. So we'll say if there are questions if you have questions along the way, feel free to ask. And if I can't get back to you straight away, or if I don't address it, I can definitely follow up with questions after as well. So basically, I think, there you go.
Oops, sorry. I think we clicked at the same time.
This is Zoom.
I'll leave it to you.
I like this. So you already saw a little bit of an intro about me. I do have a Master's in Taxation, CPA, Bachelor of Laws, Bachelor of Economics, and a Bachelor of Commerce. I got excited in the beginning when I was sort of starting out the business and decided to study everything and anything possible that was relevant to sort of where this sort of space that I'm in. And I've had clients investing in cryptocurrency for a number of years now. And what triggered my interest in this was probably, I mean, I've had lots of clients talking about Bitcoin and everything like that there. I'm sitting on some Bitcoin, which is worth quite a lot. But I started to take notice when 3 of my clients decided to invest several $100,000, but they invested it under one of the person's name. So it then jumped up to a quite considerable amount. They thought they were millionaires, and the person and then it then all dropped. But there was significant tax issues for the person who was investing, and it was all in his name. So that, fortunately, my clients were the actual 2 other people, and I still know this person's around because they're too scared to deal with it. So that's a example of when I just flagged and realized there is significant tax consequences from an investment for 200,000 to up to $1 million, and all in one person's name, all in 1 year, and everything like that. So that's when I took notice and got really involved with it in making sure clients were getting good advice. I do have a disclaimer. This is just a generic disclaimer that this is general commentary only, and it shouldn't be anything that I say shouldn't be regarded as advice or relied upon, and that you should get independent advice in regards to anything that's said today. And you can read that disclaimer. I did have I get all types of inquiries, but I had a pensioner ring me up, and he was like, I hear you're the woman to talk to about investing in Bitcoin, and I want to invest $250, and I've heard I can make it $6,000. And I got a bit stumped because, yeah, it was something that I would never get into. This is something that you're making from your own decision about it. And so, yeah, there's just that clarification about that, which I'm sure everybody here would understand. So probably the biggest question, and I had it from a client the other day, someone's accountant said that you're not taxed if you're just transacting cryptocurrency, and it's only when you convert it to fiat. That is not the ATO's position on it. So it's transactions that will need to be included in your tax return generally are buying, selling, trading, mining, staking, and potentially also giving and receiving cryptocurrency. So basically, if you transact with crypto anywhere in the world as a tax resident of Australia, this needs to be reported in your tax return. A bit unfair, some people might say, but that is the rule. Australian tax residents, so there's certain criteria around being considered Australian tax resident. Australian tax residents are taxed on any income that they earn in Australia and also globally as well. And the ATO have been tracking cryptocurrency. I have been getting clients getting sent letters from the ATO to them saying that they haven't declared cryptocurrency and that they need to put it into their tax return. And even now, when we're doing pre-fill reports, it's coming up in their pre-fill report saying this person has cryptocurrency transactions which they need to report. Why does the ATO know this? Because the ATO has quite wide-ranging powers and has requested any Australian-based exchange or anything Australian-based. The ATO has requested all of that information from it. So they know of anything, if they potentially know of anything happening through bank accounts and anything happening through Australian companies and the like. And it's now getting pre-filled, just as your employer gives information to the ATO, just as you earn banking interest to the ATO, just as you receive dividends, and the dividends the ATO knows about dividends, the ATO knows about a whole lot of things. They're now capturing this cryptocurrency, and they're sending letters out to clients to people to say that they haven't been declaring, and they've got to declare it within the next 28 days. So what I'm finding from this is a lot of people had losses initially and they didn't bother putting that in their tax returns. And now they're having gains, or they're now having profits in this financial year. And then we're going through the process of making sure they're putting in their losses from previous years. So they might have actually even lost some cryptocurrency, or something might have happened previously. And we're making sure we're getting it all up to speed because there's now gains that people are making in this financial year and they want the losses. So I'll run through that in one of the slides coming up about how gains work. So one of the key things to think about, but a lot of people, and a question that I get asked a little bit about as well, is whether you're an investor or a trader. So there are different rules, and we're going to cover investor. A lot of my clients potentially would be investors, but I then have a few that are traders. So they are day trading in cryptocurrency. They've built sophisticated software and they're treating it like a business. But a lot would be considered investors. So I'm just going to run through investors and what the rules are. So buying and selling cryptocurrency as a personal investment tool includes staking, forks, and airdrops. So these types of transactions are subject to capital gains tax, and everyone kind of doesn't know what that capital gains tax is. So we'll run through it, but basically it's capital gains tax is just basically a tax that gets your profit or your loss, whatever your result is from your trading, then gets added to your income, and you are then taxed at your individual tax rate in that financial year. So if we say relate it to a property, some clients will sell a property in a specific year when their tax rates are lower, so then they'll pay an overall lower tax rate. So one of the things that I flagged why I started getting interested in cryptocurrency and tax is the 3 boys that invested. They could have been strategic around who was holding the investment. If the investment was in the name of the highest income earner, then they would be getting taxed at the highest tax rates. So that's often a mistake that I sometimes see a lot still now, is potentially the person being employed has the money and is investing in cryptocurrency, but then they have a partner who's not working or is on low income and holding no investments in their name. They could potentially be reducing down their tax if the partner was potentially investing rather than them. There are obviously certain risks involved with that, and there are other structures that you could potentially be using. I do help clients with self-managed super funds and with trusts with cryptocurrency because the tax rates are different in those. So I don't talk too much about that, but there are ways that we can look at reducing down tax. So capital gains tax, but the problem, I will say there are ways to reduce it down. The earlier you do it, the better. So I have a whole lot of clients and I get a whole lot of queries where it's in the wrong person's name or it's in the wrong structure now. To get it out, it is going to be a capital gains tax event and will mean that there will be a sale involved and potential tax to pay on that. So the earlier you understand these, the better off you're going to be in realizing potentially what structures are available to set up the investing correctly from the beginning. So the ATO classifies digital currency as an asset similar to a share or investment property, which means that you need to assess your capital gains every time you sell, trade, or give away your crypto. I will touch base. We use software, that specific cryptocurrency tax software, which does all of this. So we don't sit there and calculate any of this. It all gets plugged into software, and the software generates a real-time report of what your capital gains are for the year or capital losses are, so you can see exactly where you're at. And that makes it a whole lot more easier, and it's generally going to be more accurate than someone trying to manually add up all of these trades, because generally cryptocurrency people are doing quite a few trades. Okay, there is a question. I think I cover it. But yeah, it's a lot. So if I invest in a cloud mining project by depositing Bitcoins to it, but it later turned out to be a scam, the website was closed and I lost all the Bitcoins, what should I put in my tax return? So there is a little bit of information that I do cover that in one of the questions, but we will try to consider it as a capital loss so that you can then be offsetting it against capital gains down the track. But you've got to potentially be doing it in the year that the loss was realized. And I've got a few clients where they've got the court paperwork, or they've got enough to establish that it was lost. So it can't, you've got to, if you do get audited from the ATO, you've got to be able to have the paperwork to back it up. And a few clients, they think everything's disappeared on them. So it's sort of a case-by-case scenario to see what information you have, but it's 100%. If you've had losses, you should be trying to make sure you're including them, particularly if you're still doing investing in crypto now. So I've got clients trying to dig up stuff, a few things from a while ago so that we can include it. They previously just wrote it off, but now they're obviously making money. So a capital gain is when you make a profit from a transaction, then you'll need to pay tax on your capital gain. What was the tax that you pay? Your tax is your tax rate. So for anyone currently earning between $45,000 to $120,000, you pay 34.5 cents a dollar in tax. There is a discount available if you earn less. So if you hold it for more than 12 months, you can get a discount of 50% on any profit that you made. So this is the same rule for shares, for a property, or for cryptocurrency. If you hold it for more than 12 months, there is a 50% discount available on that. Probably the biggest issue that we have with cryptocurrency is working out how long you want to hold it for. Even the same issue with shares, same issue. Property, most people will generally keep it for more than 12 months so that they can get, and it's just the way that that investment works. But cryptocurrency is a very different one. And sometimes clients are like, oh, should I wait the 12 months to then get the 50% discount? And I always say, like, think about, for me personally, it's about making sure you're making the money. That 50% discount is really nice, but I don't advise clients as to what they should do, because they might be holding and then all of a sudden something happens, it drops, and then they're worried about tax that they eventually don't end up paying. So be mindful to just think about that 12 months rule. Now, capital losses. If, on the other hand, your cryptocurrency is worth less when you sell it than when you purchase it, you've made a capital loss. So capital losses can be used to offset capital gains, either in the same financial year or in subsequent financial years. So capital losses cannot be used to offset employment income. It can only be offset against future capital gains from shares, crypto, or property. So that a lot of times, like I've seen, particularly with property, a client's made a loss on a property, investment property, and then they have this loss, and all it does is just carry forward and forward and forward until they make a gain from a property. More likely that they're not exactly going to get into the property market, particularly if they got burnt. But with what we're finding with crypto, it's usually there was gains potentially in some years, losses in some years, and now it's coming into gain. So we want to make sure we're carrying forward those losses because they can be very useful now, and we want to make sure we're getting all of the losses in from everywhere that they had, which they previously might have thought, oh no, I'm not going to worry about it. Now it's becoming even more important to make sure you've realised any of those losses. Another thing which a few clients got a bit stumped on when there was that peak and then it dropped is just crystallizing any losses. So if you if you trade a coin and make a profit, and then you're holding that coin, and then it then drops in value, but you haven't sold it, all the ATO is going to see is one gain, and that they don't care if you've lost money. If you're still holding it, the ATO is going to want to tax you on that gain. So a few clients got into trouble a few years ago because they'd made all this money, they were holding, and then they hadn't crystallized losses before the 30th of June. So what I mean by that is potentially selling down. If you made gains, potentially selling down on any ones which have lost. You can rebuy after the financial year, but it's a technique called crystallizing any losses. So if anyone, it's quite a specific one, but if anyone is concerned about that, I would say encourage to have a chat with me, a one-on-one chat about that. But that was the biggest issue that I saw a few years ago from everyone making significant gains and then potentially, and then losing because it all happens sort of right before the end of the financial year as well. So another question that I get asked a lot about is about this personal use asset. And so there's a quirky $10,000 personal use asset rule. I think it's more so potentially for like antique cars or something like that. But I get an inquiry almost every week about if they can use a personal use asset rule. So if you're holding less than 10,000 in cryptocurrency or any asset and use it primarily to purchase goods or services, then it's considered a personal use asset and won't be subject to CGT. So everyone's like, oh, you beauty, my cryptocurrency is less than 10,000. But let's have a look at the ATO example of personal use. Michelle wants to attend a concert. The concert provider offers discounted ticket prices for payments made in cryptocurrency. Michelle pays $270 to acquire cryptocurrency and uses the cryptocurrency to pay for the tickets on the same day. The cryptocurrency in these circumstances is a personal use asset, and there are no tax consequences. I change it from Michael to Michelle just to be just to mix up the genders. So you can see here the biggest one is it was done on the same day. It's for tickets, and the ATO is very specific. So I think this is maybe potentially more applied to back in the day when you bought cryptocurrency to buy a pizza or something like that. I could not think of, nobody's come to me with an example recently that they could be using to say that it's a personal use one, because you'll see you see the example for investment. Peter has been regularly acquiring cryptocurrency for over 6 months with the intention of selling at a favourable exchange rate. He's decided to buy some goods directly with some of his cryptocurrency. Because Peter was holding the cryptocurrency as an investment, the cryptocurrency is not a personal use asset. This means that Peter will need to consider the tax issues connected with trading his crypto and declare any gains or profit in his income for the year. So I can't think or have come across any examples for the personal use asset. You could you could try and get a private ruling if you really wanted to, but the example that they give is just hasn't fitted into any of the ones that my clients have presented, and usually they've got a lot of different transactions going on and they're clearly doing it to try and make money or have an interest in it and or make a gain from it. So some other frequently asked questions. Moving crypto between wallets. So I get asked if that is a taxable event, and that isn't. So if the asset doesn't change, then there isn't, if nothing of the asset is changing, then it isn't a taxable event. So if you're just shifting where you're storing it, then there's no tax consequences for that. If you're just buying and holding, there are no tax consequences. When it changes the asset form, that there's going to be potential tax consequences, or changing the name of the owner as well. So can I be both a trader and an investor? So the answer is yes, you can potentially be both. I'll talk about a trader, but I don't have that many clients. There are some clients that are traders. I'll talk about the traders and what's the rules around that. But the reason why someone would want to try and be a trader and investor is because they want to potentially try and get the 50% capital gains tax discount from their investment ones, and say that that is completely separate to their trading ones. And I did have that potential scenario come up with one client, but the issue was it was unlikely he was going to hold those investing ones for more than 12 months. And if you were wanting to go down this line, I'd say get specific advice, but it'd be important to have separate wallets and try and document that these are, try and document as much as possible. Your intention is to be an investor on these ones rather than a trader on it. To try and get that 50% discount. But it's what I've written there is don't keep sending coins back and forth. If you start mixing it up, and it then becomes blurry when you're trying to present your argument to the ATO. So giving your cryptocurrency to someone else as a gift is a capital gains event. So transferring it out to anybody and it's like selling. So same goes with a property. You can't just give a property to somebody and think that you're not going to pay tax on it. If it was investment property, they're going to look at what the market value was of that property. Similar thing to cryptocurrency, to shares. You can't just try and gift it away to not pay tax. You're going to look at what the market value was when you gifted it, and you can't, like with a property, you can't just say, I'm going to sell it to them on the cheap or anything like that. It's got to be the market value. So it's, another way that the biggest issue that I've had now is clients have realised they're holding it in the wrong person's name, or they want to pass it on to their partner, and it's going to trigger a capital gains tax event if they do that. I've had clients that want to transfer it into their super funds, self-managed super funds, and that also will trigger a capital gains tax event, because this tax in a self-managed super fund is a lot lower than in their individual rates, but they've got the issue of timing. So when do they want to do it? Because they don't obviously want to transfer it over when it's at a higher point. They'd want to potentially do it at a lower point. So it's a crystal ball on working out the timing to if they want to transfer it out. So are you a trader? I've just put, this is probably my biggest one here with slides and content. Just reading the questions there. Someone's asked if I've got an ebook. What I'm finding is that it's changing slightly. So I usually just prefer to just do a initial phone consultation just to get an understanding of where they're at with things. So I don't have an ebook out at the moment, but potentially considering. There you go. I'm not sure where that's coming from. Okay, so.
Put it up at the end of the session just so that everyone can sort of has an opportunity to book and
so I might just need to move it because it's blocking my slides. We'll see. So that is my little free consultation there, but I need to move it for the slides. So this question is harder to answer than it first might appear. So you'll see there's always quirky little things that go on with cryptocurrency, but it's not just about the number of trades, but it must be operating in a business-like manner. And it's like are you a hobby or a business? There is no definitive answer, no way that you can know other than just going through all the sort of different questions and then working out whether you are or not. But the things that they'll look for is significant capital investment, a focus on short-term profit generation as opposed to long-term investment, high volume, repetitive and regular transactions which take place on a daily or weekly basis, buying and selling behavior that suggests an active trading strategy, actually operating in a business-like manner, business registration, strategy documents, office space, business planning, budgeting, consistent asset selection, and business-like record keeping. So my clients that are considered traders, they are investing a significant amount. They don't have other jobs and they're just doing it from their house. And the reason, well, but they're considered a trader, so they've got to declare it like this. The reason why you'd want to try and be a trader, actually, I'll talk about the benefits on the next page. There is a benefit in being able to potentially run more business expenses through it, being able to claim computer expenses. If you're running it from your home, you'd potentially be able to claim some of the rent for your home office if you're renting. So potentially there is a little bit more scope to claim against the expenses for running the business if you are treating your cryptocurrency like it's a business. So the benefits of being a cryptocurrency trader. So there is a small business tax incentive, so you can get up to $1,000 tax offset in a year. There is a different loss rule. So crypto traders who generate over 20,000 in trades but record an overall loss can often claim against the rest of their taxable income. So this is a rule for any type of business. or different types of businesses. If you trade more than 20,000 but you have losses, you can claim that against your employment income. Earlier, you might have remembered when I said if you're an investor, then you couldn't claim your losses against your employment income. This is a different rule for this, but the issue that I'm probably having this year is a lot of clients probably aren't making losses, so it's not going to really come in handy, this claiming losses rule. And also you'd be wanting to day trade if you're actually making money. If you're not making money, then you've got to question what your strategy is and or changing it. So that one potentially might help you out when you've had a bad year, but overall potentially might not be that useful with anything. And expenses, all business and crypto related expenses such as hardware, software, trading fees and subscriptions can be claimed as deductions, and traders can also access a small business instant asset write-off. So you can write off, say if you bought $10,000 worth of equipment, you'd be able to write that off. If you're an investor, you wouldn't be able to do the same under their capital gains tax rules. So it's something that you'd be wanting to make sure you're getting correct and you're getting correct advice on in regards to your specific circumstances. But as I said, most of the time, clients are generally investors. The good thing about the accounting crypto tax software that we use is you can actually, they have one for traders, and you can actually see how it changes if you're a trader or an investor with a click of a button as well. So if you are trading, you definitely want to keep, it's just like running a normal business. You want to know exactly what's going on in your business, and I would highly advise to get a crypto tax calculator to help and assist with this. Even if you're doing it as investment, everybody should have something where they can know today exactly how much in gains or losses they've had for this financial year, because they can make then decisions before the end of the financial year. And the software is super easy to use. It links in with exchanges and can give you real reports of where you're exactly at with everything from a tax perspective. And I talk about that now. So there are ones like Coin Tracker, Crypto Tax Calculator, and Coinly. My favorite one at the moment is Crypto Tax Calculator. I like this because it's Australian developer, and I email him quite a bit. They link up to 100 exchanges, and if they aren't linked up to your exchange, then you can request that they can. They understand Australian tax rules and have been very prompt with anything that I've had to deal with in regards to assisting my clients. So that's my favorite one at the moment, the Crypto Tax Calculator. So it keeps a real-time sort of real-time tracking of exactly what's going on with your transactions. And you'll see from an example what we have done. Like I had a client come in, it's in an example, so I might not spoil it, but within an hour, less than an hour, we were able to work out what their gains or losses were for the 18, 19 and 20 year by just linking in his exchange into the software, and it was able to give us everything that we needed to fulfill his tax obligations with the ATO. He's then downloaded his report, so if he gets audited, it gives detailed reports of exactly what his investments were that related to the capital gain or loss. So the tax year is up to 30th of June, and if you're using software, then you can then give this to your accountant, or in case you give it to me, and we'd include it as part of your tax return. So there's an area in your tax return where you need to declare your cryptocurrency. It's at item number 18. So in the case of Paul's question there, it'll be working out what year he realized that he'd lost his Bitcoin, and then but there would probably be other events going on at the same time. So you'd need to be factoring in and adding up all the capital losses, all the capital gains for that year, and then putting it into the tax return component of your normal individual tax return. So this is a person that came in to see me. They got a letter from the ATO saying that they hadn't declared their cryptocurrency gains. They'd already lodged their 19 and 20 tax returns, and they needed to, within 28 days, let them know what their cryptocurrency transactions were. So we set up the software and imported everything from one of the exchanges. He fortunately had only used one exchange. It's a little bit easier when there's less exchanges, but I do have clients that use a lot of different exchanges, which becomes a little bit harder. You can also download your CSVs. So we imported it all in, and the software had given us a capital gains report. And so you can see there, 2019 year, it showed short-term gains of $4,000. And then in 2020 year, it had showed losses of $39,000. So short-term gain was $2,583 and long-term gain was $41,835 in losses. So a reason why they're separating out short-term and long-term is for the 50% discount available potentially. But you can see here that didn't apply. So Tom has to, in this circumstance, pay tax on his gain in the 19 year, and the tax rate was at 34.5%. So that's what his income level was in between that 37,000 to 90,000. So 34.5% on 4,000 is, you know, 1,000 and something. And in the next year, he's got a loss. So that loss is then going to carry forward until next year. And that's then coming into 2021. What was actually the scenario in Tom's one is he actually had losses. He declared his losses in the 2018 financial year, but he just, because he'd had losses, he just didn't care about the next years and knew that he's had a lot more losses. Now he wants to make sure he gets all his losses in, because he's got 39 grand in losses to then carry forward to the 2021 year. When we linked up the software, we could see he was sitting at about $25,000 in profit. So his losses from 2020 is going to offset the gain that he's made so far in 2021. So really important to just get an understanding of this, because you don't want to end up with a significant tax bill. One of the, depending on what your 2021 is looking like. So I would encourage everybody, if they are investing, to get onto software and know exactly where you are right now in 2021. And you can also then go through and it will show you reports of, if you import your exchanges, you can see previous years as well. You might need to do an amendment to the ATO. So that is my last bit of the slides. More than happy to, you've got my email there, miriam@flindersaccounting.com.au. You can connect with me on LinkedIn, Miriam Holme, or I am doing just a free 15-minute consult for anybody that wants specific questions answered, because, yeah, as I've said, it's sometimes little nuances with cryptocurrency investors. So, yes, that's all from me, unless there's more questions.
Great. Yeah, thank you so much, Miriam. That was super helpful, even for me. I know for me, it's my first year of trading with cryptocurrency. So, you know, before working with it, I didn't really realize it was an asset. So when I started investing in it, it was kind of not a shock, but yeah, it was the first time I'd had to deal with an asset, being 24 at the moment. But yeah, no, thank you so much. Everyone, I think I'm just going to share. We do just have like a little pop-up for ePocket as well. We would love, I know most of you are actually account holders, but if you could use this feedback form at the end of the webinar just to give us some feedback on, because we've released a new application at the moment on the iOS and the Android. So it would be great to get everyone's feedback on, like say, the record keeping, the transaction history and everything on it. Yeah, we'd love to get your user feedback just so that we can keep working on it, implementing everything. But yeah, thank you so much for coming tonight. And yeah, once again, thank you, Miriam.
Thank you. And yeah, I have been working with ePocket now, probably I think since the beginning as well. So you guys aren't strangers to me, and it's great to see what you're doing with ePocket as well. So yeah, it's been wonderful to work with you guys for numerous years. I'm not sure who is asking that question to.
Desia. Sorry, Desia, do you mean in ePocket Norway or South Africa account, or is that question towards Miriam for Norway or South African clients?
From my perspective, I just deal with so from my perspective,
Miriam, okay.
I deal with tax residents of Australia, and then we then have to declare any investments that they have overseas. But I wouldn't get involved. I wouldn't get involved with a resident of Norway or South Africa unless they have. I mainly deal with clients that have investment properties in Australia. Then they get taxed on investment properties in Australia, even if they live overseas. But I wouldn't know why I'd be dealing with a Norway or South African one. Keeping up with the Australian tax rules is quite hard in itself, let alone other countries' ones. But yeah, you can maybe send me a follow-up email about that so I can just find out exactly what you need. Because yeah, I know I can connect you in with accountants in those places, but it'd just be getting an understanding of what the need was to make sure I'd be forwarding you anybody. So I've got a question from Paul. Can I offset crypto trading business profit with loss from trading Forex trading business? I trade both crypto and Forex as a trader business. So if you're considered a business, then I couldn't see why you wouldn't be able to use the losses from a component of your business against another component of your business, just like anybody else. So I do have clients that are day traders with, they do various different things, and some of it wasn't working, some of it was working, and yeah, it all will get considered on when you're running the business as to how you're going, because that's a good question, and definitely do have clients that aren't always making money from everything, and it will all get consolidated in that small business sole trader component of the tax return.
So Miriam, so it is just one whole component?
Yeah, so
like,
if you're
even if it is different assets or different.
Yeah, so if you're so I think your question is, so it's even if you're a trader, it's still, there is a component in your individual tax return where you put your sole trader in. I did see an accountant completely mess up a client, and they put in there that this client had traded, this person it was another accountant had put in there that they'd done 38 million in trades in the year. And I'm like, do you have $38 million? Because your accountant said that you sold. Yeah, I was like, are you playing around with that type of money? 38 million. So I would definitely say, like, make sure you're getting an understanding of exactly where everything's going in a tax return, because there's a lot of accountants out there that aren't potentially knowing or keeping up to date or attempting. And these tax returns were completely messed up with saying that they've done 38 million in trade. So that is a separate area, the sole trader area. But everything should make sense to you. I find that cryptocurrency clients are a little bit more sophisticated than my normal clients. So everything, you should be making sure everything makes sense, and you're double checking things, because you are responsible for your tax. And that's why we use software. So I have heard of other accountants trying to manually calculate everything, but I would prefer to rely on software, so that if you do get in the event of an audit, you can produce the software, and that's the report for if the ATO want to ask questions, you've got all your reports, and there's no risk of manual error other than potentially not importing correctly, but it's quite easy to use.
Yeah. And have you found, Miriam, that like as Bitcoin and crypto is becoming more popular, that the tax, like that the accountants are keeping up with those sort of assets, or do you think that they're not really keeping up with what the right processes and the right steps are?
I know
on a general.
Yeah, like I saw one lady saying, I know nothing about crypto, but I'm doing the bookkeeping for a trader, and I was just like, just be careful with it. So it depends really. I think that a lot are potentially a little bit like 20 years older than me and don't really want to know what it is and ready to retire soon. So I would just be mindful that choosing someone that you know has a grasp on what you're doing, because it could end up costing you a lot more in the long run, or it could end up, you could be up for tax bills when potentially there isn't, or strategies, legal strategies to reduce any tax as well. But there are accountants out there, but I know for some reason this has sort of become a niche of mine. I've got like hundreds of cryptocurrency clients, and I see this as a bit of a future. So it is an area that I'm open-minded about, and know that it's sort of only sort of going to grow and potentially get a little bit more complicated from a global perspective. But at the moment, it's just trying to make sure that the ATO is probably the one that wants to get their little piece of the pie with any profits. So there are definitely some unfair things in regards to crypto, which I think is very unfair in comparison to shares and property, but not much I can do about those other than working within the rules that the ATO have set.
Yeah, absolutely. Well, here's Paul just has another question.
Yeah. So I usually, Paul, I would help you, but I would say I would refer you on to I'd say use potentially one of the crypto tax calculators. If I don't usually have a client that will use 2 accountants, I find that the costs involved with that aren't worth it. So my hourly charge out rate is $150. I don't charge that much for cryptocurrency ones because we utilize the software. And so, I generally find it's more affordable for clients to just shift their accounting over to myself for the tax return component, because we'll utilize crypto tax calculator, make sure everything's in there, that generates a report, and then that goes into your individual tax return. So that's generally how I work. And my fees are quite affordable as well. So I don't really, I don't go down the scenario of a client keeping their other accountant to just do their other side. I generally just find it's easier if I'm compiling and doing all of it. And I find generally, that I'm probably a little bit more proactive as well. So I've got sort of had no complaints about shifting the work over to myself.
Awesome. Well, thank you very much, Miriam. I don't think there's any more questions.
No worries. It's always lovely to have questions.
Yeah. Awesome. Well, perfect. Thank you so much again, Miriam, for joining us and for hosting this tonight. It was definitely very good for everyone to know. A lot of perspectives, especially with the investing. Are you an investor? Are you a trader? That sort of thing. So that are quite interesting. So thank you so much. And I'm sure we'll be in touch soon. Anyway.
Awesome. Thank you very much.
With tax coming up. Thank you. Thank you, everyone. Good night.